Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of August 4th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage here to give you an update. Well, last week was another roller coaster ride for Maryland mortgage rates. Mortgage rates were moving higher, found the bottom, and started to tick a little bit lower. If you take a look at the bond chart on the screen, we've had this roller coaster ride, up, down in the bonds, which has affected the rates. We were, at the beginning of the week, we were hoping to have a recovery, and then huge sell-off on Wednesday. You see the giant red candle down, started a downward trend on the bond, and then able to hammer out a bottom on Thursday, and then a nice recovery on Friday, huge big green candle, changed the trend again to now bonds moving up. So with the huge green candle on Friday and the short-term trend now for bonds going back up, we're going to recommend floating your Maryland mortgage rate to start the week to see if bonds can keep this recovery going. We got all the economic news behind us, which we're going to go into in detail in a minute. But the big report was Wednesday. That was the gross domestic product, the first reading of the second quarter. Surprised everybody, jumped up to 4%, positive 4%. The final reading for the first quarter was negative 2.1%. So a huge turnaround in the GDP, gross domestic product, for the second quarter of 2014. Now, the big increase appears to be coming from increased consumer spending and business investment, which was mostly in inventory. That could pose a problem for third quarter because inventory is a one-time shot. You're not going to probably buy any more inventory for the rest of the year, so that could cause the GDP to drop back down. Now, the average, the negative 2.1 with the 4%, we're still only at a positive 1.9%. Not a great number for economic growth, so we need the GDP to continue to surprise, continue to be higher. Now, another big report was on Friday. The July 2014 jobs report was released by the Labor Department. 209,000 jobs were created in July, and May and June numbers were revised higher by another 15,000. The monthly average of 2014 is at 230,000 jobs created per month. This is enough to support economic growth. And now we did see the unemployment rate tick up slightly from 6.1 to 6.2%, but we expected that as the jobs market gets better, people that stopped looking for work, not counting the unemployment number, go back to looking for work. Now they're counting, so that could cause the number to go up. So that number, we expected it to start ticking up as the labor market improves. Now, when you dig into the fundamentals of the report, this is the best report all year because most of the jobs that were created were for people that had college degrees in full-time employment. That's not been the trend, so that's great when we dig into that. And then when we dig in further, full-time jobs outnumber part-time 4 to 1. That's great news because for a labor market recovery, we need full-time employment, not part-time employment. And then we also saw another bonus. The labor force participation rate ticked up from 62.8% to 62.9%, so more good news there. So overall, good jobs report, good overall labor market numbers. Then, the Federal Reserve also had a meeting on Wednesday. It was Tuesday and Wednesday. Released the minutes on Wednesday. Exactly what we expected. The Feds are going to continue to taper the asset purchase program. So in August, they're going to cut another $10 billion from their purchases, dropping it from $35 billion down to only $25 billion. And they reiterated they're planning on totally eliminating the asset purchase program this year. They've got, so the next meeting we expect another $10 billion cut. So as the Feds pull back, supporting the economy, we're going to have to watch how that affects bonds and stocks. Now, other report, Thursday, weekly initial jobless claims came out, 302,000 claims, up from 279,000 claims from the previous week, but we're still hovering around a new low about the 300,000 mark. So good news there. That was a good report. Good news there on weekly initial jobless claims. It's supporting the overall good labor market report we saw for the July jobs report. And then consumer confidence surged to a 7-year high to 90.9. for July 2014. It's up from 86.4 for June, so big jump there. Third consecutive month of gains in consumer confidence, and it's the highest level since October 2007. The gains in the consumer confidence can be attributed to the improving job market, improving labor market. So good news there. And then we also had an update from USDA Rural Housing Program. They are going to change their mortgage insurance October 1st, 2014. Currently, they charge 2% for a guarantee fee you pay up front. You're allowed to finance that. And then the monthly mortgage insurance you have to pay to enroll in the program is calculated on a factor of 0.4%. Well, they're going to change that October 1st, 2014, keeping the guarantee fee the same at 2%, but the monthly amount is going to go up from 0.4% to 0.5% factor for calculations. If you don't have your commitment by October 1st, then you will be on the new mortgage insurance. It doesn't matter when you got the contract, doesn't matter when your loan went to your lender, it matters when you get the conditional commitment from USDA. At October 1st or after, you will have the higher premium. In the local news, the next first-time homebuyer seminar excuse me, is in Frederick, Maryland, Saturday, August 9th from 10 a.m. to noon. And that is at the Holiday Inn Conference Center. And then the next one in Towson, Maryland is Saturday, August 30th from 10 a.m. to noon at the Sheraton Baltimore North Hotel right there on Delaney Road. And then we have one coming up in Laurel, Maryland, actually on a Wednesday evening, and that's August 20th from 6 to 8 p.m. You can register for either one of those events by giving us a call in the office at 410-412-3319 or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.